Hi there, welcome back. This week on the show I'm delighted to welcome Deborah Keay. She's Chief Marketing Officer of Starling Bank. They were the new startup bank. Some people call them the neo-banks or the upstart banks, really contending against the big established players. We talked about how she's acquiring customers in a really competitive market space and also how the big established players are reacting to these upstart banks. I really hope you enjoy the chat. Deborah, thank you for making the time this afternoon. Just as a kind of opener, could you tell us a little bit about Starling Bank to our listeners who perhaps haven't heard of Starling and don't know what you're about, and just what you're setting out to achieve?
Sure. So Starling Bank is a licensed bank. We're licensed by the Bank of England, and we are part of a wave that I think is most known in fintech bubbles rather than necessarily in broader consumer context of new or challenger banks. But what that basically means from our perspective is we have built a bank from scratch. So we have built all the banking technology, all the operations, all of the support mechanisms. We're licensed, we're regulated. You put your money in our bank, it is protected under the FC, I always get this round the wrong way, FSCS scheme up to 75k. So all of the basic components of being a bank, we have them. What's different about us is when you open an account here, you have a bank account, you have an app, so you can manage your money seamlessly, and you have a contactless MasterCard debit card that enables you to spend your money however you want, and wallets and the other good things you would have. So we're a bank, and I think the only thing that we don't have that a traditional bank might have is branches. Okay, interesting. And you built everything, software is all from the ground up, no legacy. Yes, which is something that our CEO, Anne Bowden, was particularly passionate about doing, and she had spent her career in very senior IT and operational roles in banks, and could see quite clearly that the innovation that consumers had enjoyed, driven by technology in other areas of their lives, whether it's ordering food or a car or a holiday, whatever it was, just simply wasn't hitting banks. And it wasn't hitting banks for a range of reasons. The fact that the business models aren't set up for banks to operate in that way, that the technology is disparate and legacy, and it's very difficult to be responsive and think about innovative new ways to give products to consumers. So, we were passionate as a business about building it in the way that it should be, with genuine customer focus at heart. So, if a customer was going to design a bank to do all the things they wanted it to do, this is what it should look like. Amazing opportunity. Yeah, absolutely. And so, and you haven't launched yet, right? You're launching imminently, are you? We are saying early 2017, and you will notice that a lot of the banks, even those the challengers that have products in market but not their current account yet, are going early. But there are some hurdles we still need to go through. So one of those is we're licensed by the Bank of England. We're licensed with restrictions at the moment. That's just to double check everything is running as it should be. So we do have people using accounts at the moment, myself included, but there's a limit to how much money we can take into the bank. And when those restrictions are lifted, then we're good to go. Great. And when you're starting to think about, with obviously your hat as CMO, when you're starting to think about target audience and target customers, who's your target customers in a kind of ideal world? So, by definition, people who live their lives on a smartphone. Because we are that bank in your pocket. You can manage everything anywhere from your phone. Opening the account, getting support, transferring money, making those transactions, finding out what's going on with your money in real time, it all happens on your mobile phone. So by definition, that starts to segment your audience. I think a second consideration for us that's important is that people who are used to using apps to manage their lives increasingly as an essential utility or tool. That won't always be the case, but if you think about how many hurdles you would need to overcome. Actually, your closest audience are, app-focused smartphone users. But what we try to be is as democratic as possible in thinking about the audiences we want to serve and the problems we want to solve.
Right.
So we don't use the M word.
No, I was going to ask about the M word. But when you think of, do you think about that sort of, are you thinking about that sort of age range, 21 to 30? Is that the sort of?
I think it's important.
Is that a young demographic? Yeah.
I think you have to. One of the things, and actually one of the passions in the business, and there are a lot of young people in the business by definition. One of the things we're conscious of is we are talking to a generation of people. So if you're up to 35, you are in a very different situation to their parents. So they have less disposable income. Attitudes have changed. It's much less about ownership now. It's more about access. And in terms of, the life stages, that traditional way that banks would think about marketing to people, that dynamic's changed. Leaving home later, having families later, the amount of time people will have to spend looking at whether they'll ever be able to own a home,
own a car, whether they want to own a car or not.
Want to own a car, and actually a lot of people in that age band, they don't want to own a car. There are other ways. They've got Uber. There are other efficient ways for them to get around. So I think we have to be conscious of that, because for that generation, it's all about being able to still enjoy the experiences they enjoy in life and behave in the way they want to behave, because financial mindsets are different. Some people are impulsive, some people are focused. But also, whether you're impulsive or focused, you have longer term goals, and those can seem like impossible barriers. How am I ever going to get there? So that's what we keep in mind. Yes, it's smartphone users, but we are talking to a generation for whom they haven't got pensions, they're not into property ownership, they still aspire to those things, but they need support and helpful tools to understand how they're going to get there and what they need to do.
And how are you going about thinking about targeting them, or sort of, and are you starting to look at social channels much more and sort of, I guess, smartphone-led channels rather than the traditional billboard advertising or newspaper advertising that Barclays might do or something?
Absolutely, and we have a mantra that we don't want to look, behave or feel like a bank. When you research what bank means to people, it means a lot of things without getting into attitudes and feelings around banks. It's important to be called a bank. That is important, because it's a shortcut to a lot of things that are about being licensed and being protected and having levels of security and regulation. But that's all you need to say. You're a bank, and then you move that aside. We do not want to do anything bank-like, and in fact we ban the use of the word acquisition. We hate it. When you think about customer acquisition in traditional banking world, what you actually see is a plethora of buying customers with offers of money in a current account when you open it, and an absolutely bewildering array of small print that goes alongside any offer or communication that's put into a league table. And even worse, and we find when we're researching this that people reject it, particularly in our segments, bank-like communications, trying to take a role in your life or talking about lifestyle stages or aspirations, it doesn't resonate. So no, we will not be a brand on broadcast. We don't talk about customer acquisition. We talk about earning customers.
And how will you earn them then? What are your thoughts, early stage thoughts on
so I think there's very simple things, and in our space, product and marketing are inseparable.
Absolutely.
And product and marketing in this business work incredibly closely together. It's essentially the same thing. So how do you do it? Yes, there are some tools and techniques, like a lot of, some people have come out into market early with other offerings, but like everyone, we have latent demand because we have a significant wait list of people who want to get on to the product, and that's just because of the work that we've done to share our vision and talk in social channels about what we care about. So we have that. But our thoughts are quite straightforward. You provide a product that is a really useful utility. It solves an immediate problem. And if you get that right, your early product users very quickly help you to build your reputation and start to earn other people trying the product, and you can build out from there. Now, I'm not saying that you don't need to shore that up with other things,
sure.
But to your point, we don't want to broadcast, we want to be discovered, and we want to be discovered because people are talking about us, they are finding the product really useful, it is helping them in their lives, it's transforming the way that they do things in a useful way, and that's how we build, that's how we earn customers.
So it's product first, effectively.
Absolutely.
And it kind of brings us nicely onto that kind of customer experience. How it must be quite daunting. You've got effectively got a blank sheet of paper.
Yeah.
How do you design the customer experience for a mobile, for want of a better word, a mobile first kind of customer?
So I think there's a few things to consider, and actually how you research and develop is important. So one of the things we are wary of is it's very easy to get locked in your fintech bubble. Particularly if you're sitting in London. And if you do that, you can become focused on the wrong things, almost innovation for innovation's sake, rather than what are the fundamental problems. So we've been careful to develop by recruiting people from the segments we think we're going to be talking to, and understanding the things that are really important to them, which is again a challenge because sometimes
recruiting into the team here, effectively as part of the Starling team.
No, actually,
you mean sort of focus groups.
Partly that, but I actually mean bringing people into user testing. We've had some lockdown testing, people trying the product for real out in the wild. So we've been doing a lot of that.
Right. Okay.
But we've been doing it with real customers, prospective customers in real segments.
Great.
So how do you approach it? I think we recognised a challenge quite early, which we talked about a moment ago, which is this is really about money is such a personal thing, right? Leave aside the functional things that a bank should do for you, and your needs will depend on what kind of person that you are. And if you want to oversimplify it, we do think about people who are impulsive with money. They spend their way through it, they're not really keeping track of it. Those people still worry. They've still got all the life concerns about the rent and whether they're going to own a home and how they're going to afford the holiday, but they have a more impulsive set of behaviours, and they want you to do it for them. They want a solution. And on the other side, you've got people who are actually highly focused and will have spreadsheets, and that's how they manage their finances. They're very clear how much money they have available to spend, to save, what their investment plan looks like for the future. So you need to bear that in mind when you're thinking
quite
about
different groups, actually.
They're really different, and if you think about how you create a really useful product that answers both of those broad sets of needs, that's a good place to start thinking about, what do we really need to get right in here. Then I think there are some fundamentals that when you start to put them in front of people and they compare them to the experience they have now, these things are just no-brainers to them. So for a mobile generation, I want it now, it's seamless, it works in the way that I want it to work. So being able to tell people in real time that they've made a transaction or a transaction has happened on their account through a notification, yes, of course, we should be able to do that. Saying to people that for the first time they can see what they've really got available to spend. And what they've really got available to spend isn't all the payments that they've got set up, the regular payments, isn't the overdraft, it's what's left after that at any moment in time. And people universally do not get an accurate picture.
Which is a traditional account, you're having to do that mental picture in your head, looking at your snapshot and think, well, actually, what direct debits still have to come out in the month?
Right, and the number of people, when you're researching this, who will say to you, my direct debit dates move all the time, and I look at my banking app, they use existing banking apps, tells me I've got this, I go and blow some money somewhere and I suddenly find out that I'm in trouble. So all of these things, when you sit down and say, well, it doesn't have to be like that, you can see your real balance, you can see it in real time, you can pay somebody instantly and see that transaction instantly. And then you can get deeper into a conversation and go, you don't have to unexpectedly arrive at an overdraft because we have all this data and we can helpfully tell you where you're going to be at the velocity that you're spending right now. We can tell you what you might be able to save this month if you want to. We can tell you how much you're spending at Pret, if that's what you want to know. So it's interesting. There's a couple of things that, a couple of mindsets that are critically important in terms of how you provide that solution. But at the very heart of it, real-time, accurate, useful information. The fundamental of any smart, disruptive business is take data and give it to people in a useful way that helps them. That's really what it's about.
And do you use that effectively to prioritise what you're going to build next? Effectively, that's sort of.
And we use the feedback. So as in any business like ours, we prototype and test things all of the time. And yes, we have to have a discussion about, is this solving a fundamental need for a significant
or is it just a nice to have?
Or is it a nice to have? And there are a lot of things that are a nice to have. And we try to be really clear about what solves a need and a problem now. I think you also have to bear in mind that this is going to be quite a new experience for people. They won't have seen money in an account in this way before, with this kind of visibility, and throwing too much into the mix early is not a good idea.
You end up with confusion and uncertainty.
Confusion and uncertainty, and also we need to learn. We might have got some things wrong. We might have predicted some behaviours or needs that aren't right. So being sensible about which problem, who am I solving for? Is it this segment? Is it this segment? Is it now? Is it further down the product life cycle? And that's what we perpetually work on.
Oh, great. And that uncertainty brings me a little bit onto brand, actually. And I guess it's quite dear to your heart as well. And you've got, obviously, the very established banks, the HSBC, Lloyds, Barclays, household names, etc. For better or worse, they have that will conjure up an image in people's minds. How do you think about, as a contender brand, how do you think about building brand as Starling?
Yeah, I think again we come back to you have to earn trust in your brand, and you cannot tell people, they have to experience your brand to believe it. So when I look, it's an interesting exercise in brand. When you look at the UK banking market, the fact is 85% of all current account business is held by 5 banks.
85% are held by 5 banks?
5 banks, 5 leading banks.
I hadn't realised
the big banking groups in the UK.
It shouldn't surprise me that it's that concentrated,
And what's interesting is if you deconstruct that and you talk to people about how they feel about their bank and how they ended up with their bank, we hear the same things again and again. My parents set up an account for me. I set up an account when I was a student. So when we think about banking brands at the moment, I think it's about where could I go for that utility that I needed. I have to have one. There wasn't a lot of choice based on experience of the brand. There was a lot of choice based on, did they offer a student loan account? Was it the one my parents used?
£10 HMV voucher.
£10 HMV, 250 quid if you open a current account. That's how they made those choices. So, and if we look at account switching behaviours as well, something like 3%, I think, last year of people switched. And funnily enough, most of those weren't in the segments that we're talking
and that kind of, well, that's interesting. So that low, that sort of 3% switching, does that give you concern, or in the sense that because is there? I have a mindset that if I move from one big bank to another, actually it's a bit like moving utility companies. Broadly, it's going to be the same service and with a slightly different flavour or colour to it, but they all normalise around this.
It's low interest category, and actually there's some quite, if you ever have a moment to read it, some quite erudite and interesting research on why people don't switch, which is also about loss and fear of things going wrong.
Huge fear of all direct debits not transferring across and all the hassle that come with it.
It's a faff, and to your point,
do you not face that though as a challenger bank? This sort of.
So we're not asking people to switch. In early stages, because...
So would you see yourself as an addition? So I would start using Starling in addition to my existing bank, and then slowly in time, I guess I'm putting words into your mouth, you're looking to take more and more of my banking pie, if you like.
Exactly, and
Right.
I think that's the important thing.
Right.
There is no point launching a new bank and saying switch.
Yeah.
People won't switch.
The trust threshold's too high.
We have to prove that
Yeah.
there's a good reason to do that, and the best proof, to our earlier conversation, is to experience the product.
Yeah.
And bearing in mind there are 3 or 4, we think,
Yeah.
current accounts coming out into the market this year in a new model,
Yeah.
mobile-based propositions. We think people will try before they buy.
Yeah.
So our job is to make it as easy as possible for you to open an account, put some money in, and see how the product speaks to you. The product literally speaks to you the moment you put money in and you start using it to transact. And then the playing field is about, this is where we come to brand. What is the product experience like? Are we meeting those needs?
Yeah.
What is your experience like when you need to reach out to support for some reason in the business? How do we treat you? If you slip up and go overdrawn for half a day, do we hit you with a fee?
Yeah.
The answer in our case is no.
Yeah.
Do we charge you for having the privilege of having an account?
Yeah.
No, we don't.
So is your business model different, the way you're looking to make money than the traditional banks?
Yes, because the traditional banks,
Yeah.
when originally established, the current account was a loss leader effectively to sell in all the other products that the bank could offer you.
And I guess they make money on an arbitrage between deposit and lending and the interest rates, but also then I guess the fees that, as you say, you're overdrawn and they slap you with a letter or whatever and upset you with it, or upset the customer with it. So how are you looking to, what's the sort of business model, if you're happy to talk about it?
We talk about it quite openly.
Yeah.
So first up, we are offering a bank account, a current account in effect, but again, people don't really know what a current account is. So it's a bank account.
Yes, okay.
And we will not be setting up our own savings and other branded products, if you like, credit cards and things to sell at people. You can save within your account with us, and you will get a decent competitive return for doing that. We will offer people overdrafts if they qualify for overdrafts, and like anywhere, we will charge some interest for having an overdraft. And like any bank, if you deposit your money with us, we will lend that money out to other people. So at the heart of our business, we can provide overdrafts, we can have people saving with us, we can do all of those good things. What we're not doing is trying to flog you our credit card and ratcheting that up, and we're not trying to flog you a mortgage. We're not trying to do that. We have a different approach.
And I guess your cost to operate is going to be that much lower as well, because you've got a new technology stack and you're building from the ground up, really. There's no legacy, no branches.
Precisely. We have a lean model. So, we have very carefully looked at how we can deliver a really good service, not hit people with charges, treat people like human beings. Everybody slips up. Offer what will hopefully be reasonable rates and competitive rates to people, and make money.
And who do you see? You don't have to name names, but do you see the big banks as the competition, or do you see the other contender banks as the competition, or do you have one eye on both, really?
I think we've got eyes on both. You cannot take your eyes off the big incumbent banks, because they own the majority of the current account market, and salaries are going into those accounts. And there is inevitably going to be a tipping point in any new bank's fortunes when you get to the moment where somebody goes, I love this, I am actually going to move my salary into this account, and I'm going to set my life up here. So that's the same thing that's going to be important to all of us, and that business is at the moment held by those big banks. So actually we look to both. In terms of who we think is of most concern to us in terms of getting people to engage with our product, it's not the big banks. In fact, they're not very interesting to us from that point of view. It's the other challenger banks, because people will try different things out and see how they compare the experiences. So
it's kind of share of attention, really, and share of mind.
Absolutely, and how well the product is received, and how quickly we can build traction.
And how are the big banks reacting at the moment? Are they ignoring you? Do they see you as a novelty, or is it kind of, well, we'll see what happens a little bit? And sort of.
So you get all sorts of responses. But I think, when we look at the big banks at the moment, when I look at it from a brand and a comms point of view, the thing I have noticed very clearly is that suddenly in the adverts there's a mobile. There's a mobile in the brand ads now. Oh, and we have an app. The fact that the app isn't a place where you can set up your direct payments, you have to go to the web, which is completely different to the one on, we have an app. So they're beginning to put mobile into the communication and make more of that. We're seeing branch networks being promoted more as an advantage now, even if it's a different format of a branch network as well. We're seeing that response. That's from a communications perspective. But from a strategic perspective, what's interesting is, on the one hand, the big banks will dismiss. On the other hand, we are inundated with approaches from big banks who want to partner or involve us in their own innovation and research programs.
Is that because they want to learn from you and I guess bring some of your innovation in-house as well?
We've had all sorts of approaches. I mean, our CEO is inundated. Can we use your platform?
That's an interesting one.
Can we partner with you? So it's interesting, and I think you see these innovation functions popping up in the large banks now, but there's going to have to be a fundamental shift in thinking in those businesses, and a fundamental investment and willingness to not make money for a while for them to actually be able to do what we're doing. Various different attitudes and approaches. I think the other important thing about us, though, is because we're not offering investment and ancillary credit cards and other products, around the core of our account, we're working on developing a marketplace. And it's a marketplace in which it will be plugged inherently into the intelligence of the engine, but it actually supports. There's a PSD2. I've had to learn a lot about regulations since I've been here, which is a regulation about having to make your data available to other businesses. So this is something that all institutions are going to have to comply to by in 18 months' time or so. Now, what that effectively means is that if you were a customer of Starling and you wanted to be able to have a mortgage with another provider, then there should, in principle, be an exchange of information through our API that would make that a seamless process for you, and could even make that a process in which, because you had a relationship and a credit history with us, a lot of the onerous things you might have to go through in an application can be removed. So our thinking about what we do for customers is to do a current account brilliantly, enabling you to control your money and see it in any way you like, but also give you frictionless access to the right things that might be helpful to you at the right time. And we're not advising, we're not selling, we're not an affiliate, but
just doing that really, really well.
Just doing it really well and plugging it into the intelligence in the account so that it's contextual and it's relevant to you.
And when you're one of the things that sort of always interests me is when you're contender, challenger, but disrupting the industry a little bit or a lot, and when you're thinking about recruitment, are you bringing, if you look at the top team here or even your team, etc., are you bringing people from outside the banking world with fresh thinking, or are you mixing it up a bit that you've got existing people with banking experience and external?
So I think we've got a very healthy mix. So if you are a bank, you need people with experience of running a bank, regulatory environments, risk, compliance. We have a responsibility to safeguard people's
consumers' money and people's money.
So you have to have that, and we have some brilliant people in those functions. The thing I would say is they are not your typical bankers. So they are people who are passionate about making this change for good on behalf of customers, to give them a good experience, and that drives everybody.
So you haven't got legacy team. I say legacy is not the right word, but traditional old banking thinking rubbing up with disruptive new thinking
no,
people
and
are working together.
Anyone who works in marketing can joke with you about compliance, right?
Yeah. Yeah.
And what you need to go through to get a communication out to market. Compliance here is genuinely a joyous process, right?
Yeah.
We sit down, we work together, we innovate where we can, we protect, we do what we need to do to be fair to customers, and we do that quickly, right? It's a completely different way of working. But to your point about, do we have people from other backgrounds? Absolutely. There are people in this business from Amazon, there are people from consumer brands, there are people who've worked at Spotify. We're bringing people from all sorts of different segments of the market, different app-based propositions, different ways of thinking about marketing to consumers that isn't about being an old world brand.
You can learn from their background and experience.
Absolutely, and that all goes into the mix. And a lot of really deep specialists in things like payment systems, stuff I don't even begin to understand. Our chief product officer came to us from PayPal, and he is leading the product innovation charge here. So
that should give you a lot of confidence. Anyway.
It gives me a huge amount of confidence, and it's a really good working relationship. And it's nice. Marketing and product are very closely aligned. We have a very shared vision for what we want to achieve for a customer, but it's not just us. That vision is reflected at the executive team level as well.
Great.
Operations here are remarkably responsive. If we need to put in something to support customers, they do it.
So it's a great way to end actually on vision. If you had to paint a vision of what you think Starling Bank will look like in 5 years' time, is that good? Are you able to sort of paint a little picture there as a kind of finish? Where do you hope Starling will be?
Where do we want to be?
Yeah, where do you want to be?
So we have an ambition, and
ambition's probably better than vision. Yeah,
and it's very easy to talk about the number of customers you want to have, or the number of countries that you want to be in. Let's leave that as an aside of success. Yes, we hope that we will grow. We are ambitious to grow on a global scale, but I think what we really care about is that we give people a product that enables them to essentially live a healthy financial life.
Okay.
Right? And if we get that right, and if we've had a customer using our product for 5 years, I would hope that we have in some way helped them on that journey. That's what drives us, and that's what motivates us. If you get that right for the customer in this complex, difficult to talk about, challenging world of managing our money, then we will grow successfully. The numbers, the territories, things will follow from that. But that's where the ambition is, doing that for the customer.
It's a great place to end. Thank you very much for your time, Deborah.
It's a pleasure. Thank you.
Thank you.